Welcome back. Sadiq, before the break, we've been talking about stubbornly high inflation. If you're the Bank of Canada, if you're Tiff Macklem, what do you do? And I guess the second part is it fair to put this squarely on the central bank? Because inflation, by the way, it can be managed a little bit through fiscal policy as well.
Yeah, I think you do have to put it on the central banks. I mean, you said right at the beginning, the term transitory was probably the biggest mistake out there, right? And so they should have started, raising interest rates significantly earlier, and they didn't. I think what they're doing now is what they need to do. I think they have to ignore market reaction and do what is right now, which is to curtail inflation by raising interest rates, align with where inflation is at. So because inflation has not come down, I think they need to continue to put their foot on the pedal and be aggressive on raising interest rates. If they can do that, and then they start to see inflation coming off, they can slow down the 75 and 50 basis point hikes back to 25, which I think then gives the market a good signal that though inflation is still there, it is starting to become under control. And I think that's an important part. If they don't go fast enough right now, they're running into bigger problems down the road. And if the economy is much weaker then, it will be a lot harder for them to push that interest rate much higher because they will put it into a very hard landing on the recession side.
hmm So markets are spooked. We're seeing some of the markets in squarely in bear market territory. Do you see more downside?
I do. I do see quite a bit more downside. I think, we had called it right that when we saw the earlier bear market territory, that we would see a bear market bounce as a result of that. And we did. But the story hasn't changed, right? Inflation is still quite high. The banks are still aggressive. And as I said, I do think you're starting to see the consumer lose a little bit of confidence, and that's going to have some impacts going forward. Whether that's again because housing will start to slow down, and we're seeing sales activity already happening because of higher mortgage rates. Debt levels are going to, are still high, and therefore are going to be impacted by higher rates as well. And then I think you are starting to see some evidence of corporations either slowing down their, hiring practices, or they're actually now starting to actually cut workforce. And that is the really big, negative sign that will impact retail sales and consumer confidence, and what could take us from being a soft landing to a more severe hard landing in the economy.
Do you think that we have the S&P TSX composite is a little bit more resilient? I mean, it's not in bear market territory, and part of that is because of commodities. Do you see that sticking around? The relative outperformance, or do you think that could change?
Yeah, it's been one of our best calls. We sat around and thought about where we think the best geography out there is, and it is Canada. It's benefiting from the fact that it did better as a result of COVID. So employment numbers are much higher now than they were even before the COVID situation. We're benefiting off the energy and the commodity cycle. We're actually one of the few countries benefiting off the Russia-Ukraine situation as well, because many of the things that Russia and Ukraine produce, Canada produces as well. So as people
Right.
move away from supporting Russia, they look at alternatives. Canada's a benefactor of that. And the valuations of Canada are significantly less. So therefore, when you do have retreats in markets, it's the higher valuation names that get hit because of the higher interest rates, and that's not Canada. So Canada actually does look a lot more attractive than other countries around the world, and it is where we have our overweight positioning.
Sadiq, I have a chart that I want to pull up, and this is this popular cycle of investor emotions. And the reason I do this is because I'm seeing it everywhere on social media. And I pulled this one from Forbes. I thought it was funny because it uses these emojis. Where do you think most investors are?
I think we're in that denial and fear
Denial.
stage. Yeah, because there was denial for the first part of this year when markets were going down and we were seeing inflation. They didn't think the Fed would move as much as they have, or that inflation would stay as hot as it has. And now they're in a bit more in that fear stage, but we're not at the panic level, which is why I think we're not at the lows of the year quite yet. You have to get to the panic level where people are just throwing everything out of the works, anything they hold, and that's when you get really capitulation, and that's when the opportunities really start to emerge. Because yes, valuations are cheaper now, but they're not cheap. And so therefore, I think we're still in that, starting to get to that fear stage, but not to the panic stage quite yet.